when it comes to entries, perfect entries, particularly trend lines, key levels are very important. Confluences helps us find a better positioning in our entry, and the most one of the most important thing in trading is to enter at the right time. This is FX Mesh welcoming you back again to my channel. um, I've actually altered my trading style because I've been doing a research on how to better my trade entries and my style of trading due to the dynamic nature of the market. It's very important to always take a retrospect of your trading pattern and seeing um, from notes taking and lessons learned to better having a better perspective of what the market would look like, or what are the most important things that are required to get into a trade. You see, trading is not as easy as people think. When you watch a video, or maybe you attend a lecture of an idea being explained to you in forex or crypto or whatever, and you might actually grasp the understanding of what has been taught, but putting into practice is another completely different thing entirely. And this is why I've been really working hard to ensure that I improve on my trading, on my entries, and learn from losses I've taken. So that's why my approach is now more of based on a multi-time frame analysis, and which involves confluences, or confluence made or built as a result of trend line meeting at meeting key levels and psychological levels. And this is what I'll be explaining and furthermore in my other upcoming videos. And that is why my forex weekly and in this video presentation would be a little bit different, because what I want to do is to ensure that I can enter the market more perfect than I used to. And it's very important. I've been trying the multi-time frame analysis, and it has really worked. Last week I made very good pips, and I focused on GBP USD because GBP USD appears to have a kind of always creating double tops or double bottoms, always creating some form of stuff like this kind of shapes. And you can see, let's go back to what happened GBP USD. Now this is my GBP USD. This is a 4 hours time frame, but this is my the time frame I use to construct the setup, and have my 15 minutes time frame here. It's a little bit messy. It's very messy. A lot of analysis went on, and this has really helped me seriously, significantly. I did a whole lot of testing all through the week of 23rd to Friday, 27th of May 2022. And I started with a bit of analysis from the first day, which is 23rd. And you can see on the screen, look at where my cursor is. You can see here is 23rd here, so 23rd here. So it's a little bit messy. I deliberately didn't want to delete this analysis I did in the week, just because I wanted to show you what I've done. And I did a whole lot of calculations and analysis. Now what I did first of all is I will just do something here. Now what I did here, first of all, what I did was to go to the section break. So what the section break here is to separate the days of the week. So you go to settings, you right click on your screen on your trading view platform, right click, then you go to settings, then you click appearance, then you see a session break here. You click session break, and when you click it, what happens is on the 4 hours time frame, you will see that the market the chart will be divided into different sections with broken vertical lines, and these divisions, it identifies that from this point to this point is a day, from this point to this point is a day, another day, another day. So if you count 5 working days, that's Monday to Friday, that is the trading days for forex. Now what I've done is that I used this breaking lines, which represents each day, to identify first of all my 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 week, my highs and lows of the week, the highs and lows of the week. That's what I did on the 4 hours time frame. You go to 4 hours first of all, 4 hours first time frame, then put your session break. After your session break, you try to let me try and so yes, 23rd here. Okay, #23rd. I'm just feeling reluctant not to. Okay, yeah. Now this is it. 23rd of May. That was the first day that of a trading opening. It opened on 23rd in the morning, and what I did was to first of all you mark the highs and the low. The first candlestick and the second candlestick is very important in this marking of the highs and the low. Now, if you look at this line here, you can see that I marked, I put low of the week. This line is low of the week. How did I get this line? I started from this, under this bar, and the high of the week is under this bar here, then the high of the week is this one here. It has shifted a little bit, but you mark high and low of the week. I think what I'm going to do is I'm going to explain this I want to leave this because I actually did a whole lot of calculations here, but I'll have to explain this with using a different pair. That will be better. Let's go to, let us use USD CHF. I like to use US pair to analyze the market with this particular analysis. Now, first of all, let's start again. Let us make it very clear. Look a little bit choppy. All right. Now, first of all, you go to the chart area. Go to 4 hours time frame. When you go to the 4 hours time frame, then you right click on the screen anywhere, click setting, click appearance, click session break. Now you see that the session has been broken. This distance between the two vertical broken lines indicates a day. This is one day, another day, just like that. So you can see that on the 23rd, this is Monday, this is Tuesday, Wednesday, Thursday, Friday. Okay, Friday, Saturday, Sunday, which is all this one here, Sunday. So because the market is closed Saturday and Sunday, there's no lines here at all. Monday we start from here or somewhere around. Monday will start on the 30th. So Monday we start from here, somewhere around here. Now, On the 23rd, what we want to do next is to mark the highs and the low of the week. So when the week started, let's see if we can. Okay, when the week started, it started with this week, these two candlesticks. Now what we want to do now, you want to know the high and the low of the week. So what we'll do is to draw a vertical line on the high of this, the high and low of these two candles, 4 hours candlestick. You draw a line on top of it, then you draw another of the low. See it for the first two candlesticks. Now the next thing is to look for the decisional candle. The decisional candle here, the reason why we're usually looking for a decisional candle here is to identify the direction of the most direction of the week. Where will the market actually do? What will the market actually do? Will it do more of sales and buy? That's how we identify the direction. Now, if you look at it, after waiting for this two candlestick to form and went further, we discovered that this market, candlestick was already, this bearish candlestick was already breaking out on the low part, and you can see a full candlestick here pushing to the downside. This candlestick here is the directional candlestick, and it means that there's going to be more of sales in the week. So that's how, and you can see there's more of sales in the week. You see, that's happened. So what do we do next? Now our directional bias is what? Directional bias for the week. Directional bias for the week is what? Sell. Okay. Now directional bias of the week is sell. Now this is the you put here, you mark here as the what? At the high of the week of the week. And we have what? The low of the week. So the next thing we want to do is to draw trend lines. How do we draw trend lines? Drawing a proper trend line, you need to make sure 2 points must meet. So we'll draw trend lines here. You can take from here on top here. You can draw that's our trend line. Then what else? You can take that out first and draw, draw our trend lines. Let's take out this section break so that the market is clear for us to see what we're doing. Then we'll draw our trend line properly. Just 2 points. If 2 points meet, that will be good. Or you can even draw this. Let's say you can even draw through here. Let's see. It's a very strong sell for USD, meaning that the US dollar has been weak compared to for the past a week or two. So yeah, so what do we do next? We draw a trend line. Now the available trend lines drawing there or drawing here is just the single one there. Every other trend line is irrelevant. If you can draw a trend line here as well, yeah, but it's irrelevant because you don't need it's not needed actually. So we'll just remove that one. So what we want to do next is to draw psychological levels. Now what are psychological levels? I always mention psychological levels in my previous videos. Now psychological videos psychological levels rather are rounded up figures. Like for example, now look at it, 0.99000 is a psychological level because it's rounded up. If for example you want to go to you want to buy something, many times you discover that the values are rounded up. So if you are buying or selling at a price, many times these psychological levels are levels that people want to buy at, or price are being set at. Now this is psychological level. This is rounded up. This is rounded up to zeros. Rounded up to zeros. These are psychological levels. You see, almost all the numbers here, fortunately, are psychological levels. So what we want to do now is to draw rounded up. We draw psychological levels that are rounded up. We cannot say we cannot go to the. We can say 98. Let's say 98500. See 98500 here. Let's see 98500, and let's make it 10 so I can. Yeah, that's 98500. We can have another one again. Let's see, just put it anywhere. Then we can have let's say 9650. That's 500. I mean, 500 here. These two lines I deliberately made them tick, and you can change the color to, let's say, red. This red. Okay, I'm just explaining the breakdown of this multi-time frame analysis that I've been testing this week, and what I'm going to be using for my analysis. It's a bit detailed and very technically based. Yeah, so I just psychological levels. I think these ones are enough for now. Let's draw another one down here. Let's pick this one, 0.9450, because the market is going down here. So this one's my matter now. 0.594,500. So just put line anywhere. Then it's green, so let's just put it green. Then 94,500. That's for this one here. So we'll just say okay. It goes there. Then we'll use it and let's make it tick. I mean 18. So yeah. So this are psychological levels. This level, this level, this level, this level. Now, what have we done so far? We have drawn. I'll just put a summary here so I don't get you lost. What have we done so far? With what? One, we use H4, got on H4 time frame. 2, we identified highs and lows of the week. 3, directional candle stick that helps us give us an idea as to whether we'll be having more buys or more sells. And in this case, we're having what? More sells, and it was more sells. 4, draw trend lines. 5, draw trend lines, psychological levels. And 5, entry on 15 minutes time frame. Yes, I'll reduce it a little bit. Yeah. Now this is what we want to do. This is what we want to do. You see, I'm going to be tracking GBP USD or any of the, yeah, most likely GBP USD. Now this is what I've done so far. Now the only thing I've not done here is to enter 15 minutes time frame, which I'm going to do now. Now I've done 1 to 4. Okay, I started with H4 time frame. I go to H4 time frame. Secondly, I identify the highs and lows of the week. 3, I identify the directional candle. What we do is that once the market starts on the first day in the morning, on Monday, you wait for the first 2 candlesticks first of all to draw your highs and lows. Then thirdly, you wait for the third candlestick, or the next candlestick that breaks either the highs or the low. Once any candlestick that breaks the highs or the low, whichever one, that direction will determine whether we have more highs or more lows of that particular week, and which is very good in helping us have a bias as to what more sales will be taken in that particular pair. Now, after doing all that, we draw a trend line, appropriate trend lines, psychological levels. Psychological levels are rounded up figures which buyers can buy or sell. Now this is psychological level. This is psychological level. They are rounded up to 0. Okay. Now, as far as this market can go, as at this point in time, now this is what we have got so far. The next thing to do now is to go into 15 minutes time frame to find our entries. Go to our entries and you start preparing it. Sorry, let's go to okay, 15 minutes time frame. We enter our 15 minutes time frame. Okay, then we'll start looking for entries. Okay, now to look for entries, there's something we must do. Wait, I want to figure out where. Now, for you to enter a trade, we must have at least three things that must meet together or must be in the same region. For example, now the market is here. The psychological levels, the trend line, and the market bouncing in this format like this, in this creating double bottom or double top, or just bouncing at a point, is key for us to enter. Okay, now what I mean is, now let's find an entry. Now let's look for the closest psychological level around this area. If we can find an entry here. Now this is psychological level here, 0.95 800. Now let's just create one here. 0.95 800. See, now, okay, now we're looking for entry. Now there's a psychological level here as well. Let's try and create a lot of psychological level around here to see if we can find a better entry. And the last thing to do is to ensure that around for an entry to take place, there must be a double bottom, or a bounce. Okay, now let us draw another one. We have one here, this one here. So for 5, yes, 500 as well. I'm just trying to mark my psychological levels. It's a bit of work, guys. Believe me, this thing works. Okay, now see the market. See. Then there's another one here somewhere. Is one somewhere around here. There's one somewhere around here. But that's fine. Now what we want to do now is that the overall trend of the market is pushing to the downside, right? Okay, so we, in this case, we look to the left. Let's see if there's any. Okay, now it's not too clear. There's no signal here for now. There's no clear signal here as far as USD CHF is concerned, to be honest. Now let's go back to what happened in the past. Let's try and find an entry. Now if you look at, let's look at this area. Now if you look at what I mean by my entry is that if you look at this area, see this is psychological level. As far as all the numbers here are psychological level because they are all rounded up. Now look at this psychological level around this point of entry. So let me 998 something. Let me 99800. Okay, let's do 99800. 99800. 9800. Now look at, guys, this is an entry. For us to make an entry, we must have three confluences. Now watch it. One, trend line meeting psychological level. 2 and 3, that the market created what? A double top. When the market was, let's assume the market was here, it went up here, it rebounced, it came up here again, and you can see that it was about to go short because you can see that there were a lot of there was some rejection here, and you can see wicks. Once you start seeing wicks forming after that double top shape forms on that area of confluence, this is a signal for a sell. Remember, guys, if you want to trade on a double top, you wait for the market to form the first touch first and the second touch. Once it's here, once you see wicks around here, ready to take a sell, and that's, you can see how strong the market put to the downside. That is why I took a sell there. You can see why I'm taking a sell here. And look at it, it pushed to the downside. And how do you know when to stop? Put your take profit. Look to the left, and you can see that there's a key level. There's a structure here. So you draw a structure here, a line like this here. Okay, that's when you stop. You stop your take profit. So if I was here, I would have entered here down, and you see it. So each time you want to take an entry, there must be a double bottom or a double top for you to take an entry. That's how this strategy works. Now you can also see another one here as well. Well, 1 2 1 2. You can enter from here actually, but look to the left and to the high of the high of the week. See the high of the week. So the strategy for entry is very simple. Confluences must be, if a confluence must be formed around the area. So I'll just draw the region with which one can enter. Here is a region for one to enter. Okay, here is another region for one to enter. Here is a region for one to enter. Why? Because this is what a key level from the past. Okay, then it is close to a psychological level, and the market has formed what? A double top. 1 2, consolidation and some wicks there. That it can see some wicks inside here, and take a sell straight to the next to the next key level, which is the high of the week. Now that is just this particular strategy in analysis. Now I've tried this strategy and it's working. The analysis is very good and it's working, and it works for GBP USD. So this week I'm going to be showing you a detailed analysis of what this market can do in one particular pair. I'm not going to go around through so many pairs. I want to make sure that I'm able to focus on a few pairs and show you in a detailed way of how to stay in the right side of the market with this particular strategy. This is FX Mesh, smashing it. If you like what I'm about, please like, subscribe, and share. Catch you in the next one. Peace out.